You have these desk adjusters that work in these call centers in small town, Midwest. They see estimates from all over the country. So they'll see a job. They're like, oh, well, I just paid the same job. It cost 10 grand down in Louisiana. But we're like, well, now we're in, suburban San Diego or Los Angeles or something like that. And I'm like, hey, $50 an hour isn't a viable price to hire anyone here in any tradesman kind of thing. So there's a lot of just lack of knowledge and experience in the industry.
What is going on, guys? Welcome to today's episode of the Collecting Keys Real Estate Investing Podcast. Today we have David Melzer, who is a personal friend and an insurance adjuster out of Southern California. He lives in San Diego specifically. And we have a great deep dive into what you're supposed to do when you have a rental property or your own house that has some sort of insurance claim issue and you're looking at it and you're going, I feel like I'm not getting enough money for the situation. Guys like David, they can come and help you solve that and help you get significantly more money, right? By, working with the insurance company and helping adjust the claims that, you're battling back and forth with the insurance company about. So this is a really, really awesome episode. We go into everything you need to know about working with an adjuster. He talks about some tips and tricks for how to get the most out of the conversation, when exactly you should look to hire an adjuster, and how you vet adjusters to make sure that you're getting a good one. And really, if you're a real estate investor, this is a must listen. This is a must listen because, it's not if you eventually have an insurance problem, it's when. Because if you own real estate, stuff does happen. We got weather changing all around the world. We got weird stuff that goes on. You have, wiring that wears out. You have plumbing that wears out. Eventually, you're going to have problems, and insurance companies are not fun to deal with. But that's why guys like David exist. So grab your notebook. This is a really, really awesome episode and will be super educational for you. Also, the great news is David works in a bunch of the Western states and also Tennessee and Kentucky. So if you like what you're hearing and you want to reach out to him, definitely do so at the links that he drops at the end, and he can help you figure out any of your insurance woes that you deal with. So we appreciate you all listening. Please go and leave us a 5-star review wherever you listen to your podcast, and enjoy this really, really educational show with David Melzer. All right, we are here today with David Melzer from San Diego, and I am super excited to have you on the show today, David, because I met you in Lake Oconee at the GoBundance conference, and you have a business that I think is so applicable to real estate investors, and you are I guess, tell me if I explain this wrong, but you're our insurance claims adjuster, like a consultant. We can kind of go into it, but either way, your property is called Property Claims Consultant, and you help people like us or other real estate investors not get completely screwed over by insurance companies when things go awry. So super excited to have you on the show, man. So I guess
absolutely.
Maybe give us a little background about you and what exactly
I guess the proper term would be public insurance adjusters. Sometimes it changes a little bit state by state, but that's kind of what we're mostly known as public adjusters. And so what I always kind of tell people is that envision, you're going through the worst of all scenarios when it comes to an insurance claim. Your home burned down. Let's just say it's your single family, your primary residence, and you have nothing. I mean, you leave the house with it's in the middle of the night, and you leave your house with, sleep attire and maybe your cell phone or things like that. And now you've got to try and piece together this home on your own against like the biggest bureaucracy in the world, pretty much, these multi-trillion-dollar insurance companies. And so the insurance companies always will come out and they always give you a lowball estimate. I mean, I think we had talked briefly where you even said the same thing, where you guys have been lowballed, and it happens all the time. Mm-hmm. And our main goal and focus is really just tackling the financial aspect of the claims and getting people the highest dollar that they can get out of these insurance claims, and maintaining like absolutely like an ethical boundary when it comes to that. Everything that we do is just playing the cards that the insurance company does right back at them. So like the insurance company has teams and teams of adjusters that are trained endlessly to be able to adjust the claim that brings the outcome that they're looking for. I always say this kind of to our clients to say, well, why don't you have a team helping you adjust the claim on your end as well? So we're just advocates in the court of the homeowner, and that can be the homeowner, the investor. We do everything from businesses to warehouses to manufacturing facilities to manufactured homes to residential homes to apartment complexes, kind of the whole spectrum. As long as there's when there's like first party property damages. And that's how we really come in. And most public adjusters work on a contingency fee. Some will kind of do some hourly consulting work, but most of the time it's a contingency fee. So we're very inclined and motivated to get you guys like the most you can for your buck, because that's how, like, we have a direct linear correlation of how much we get paid. And selfishly, we want to make a buck as well. So,
right. So I got so many questions on this one. But like, let's start with, the idea of like what that insurance company's team looks like. And, like Mike and I have gone through these and what I see. And so I'll just share this. And then I would love to get your insights on like the insider baseball stuff on this, because I think you worked for insurance companies prior, right?
Yeah. I was with them for about 10 years.
Okay, perfect. So so like you file a claim, you've got your, we have an insurance agent who just shops for us. So we call her and say, hey, we got this claim. And then they obviously refers to the insurance company that's on that property. We go through it, and then they send out an adjuster that works for that company. They come out, look at it like, yeah, man, this is damaged. And then they can't come and give an estimate of what it's going to cost to fix. And then basically you can go and get a contractor to do the work for that price. Hopefully that's the price that the contractor can do it for. I would have thought it would be the other way around, like go get your contractor, get quotes, and then tell us, but it's not. Can you kind of give us like the rundown on how that whole business works? Because it seems terrible.
So it used to, it really is. It's really just a whole succession of checks and balances on the insurance carrier side that really sets the consumer up for failure. And let me kind of focus on that question first, and like how the adjusters work. And so, I mean, they're trained to work off of their specific estimating platform, and there is so much criticism and so many eyes on an estimate. Or so like, let's say, for instance, they come out to your house, you had a flood in your kitchen or something like that. The adjuster comes out and writes, X, Y, and Z for the cabinet, some countertops, some drywall or whatever. That might get looked at 4, 5, 6 times by their superior, a re-inspector, a quality assurance type person, quality management type person. They have, different names within each insurance company. And so each person's going to say, oh, that line on him isn't justified. Let's pull that one out. Oh, that one's not justified. So this adjuster that comes out there might start with a $20,000 estimate, but by the time it goes through the ringer with this internal review team, it might get cut down in half. So even if the adjuster missed some stuff, now it gets cut down 2 more or 3 more times. And so you're left with this work product or estimate from them that's just so minimal that you can't actually get the job done. And then you'd mentioned, like, why doesn't it go the other way where, hey, I've got 3 contractors. They say it's going to be X, Y, and Z dollars. Why can't you just pay the mean of these estimates kind of things? And that was kind of the long ago, like late 90s, early 90s kind of perspective on the insurance companies, is that they would do that exactly, is that before the invent of, internet and the ability to handle things remotely, everybody would just go to their respective contractor, or in the cases of, auto body claims, they'd go to like a body shop and get 3 estimates. The insurance company would kind of just take the mean of the estimates and pay that. But since then, now they're doing things virtually. They're sending out adjusters and things like that, trying to minimize that dollar amount and be competitive in the industry. And so they very seldomly will actually just take a contractor's estimate and pay it. It's always going to go through this gambit of reviews internally.
So that's funny, or not funny. It's interesting because you brought up auto claims, and I feel like that system's pretty dialed in, because I go to like an auto body shop and they're like, yeah, our cost is going to be exactly what the insurance company's going to pay. So like they figure that out, I don't know if the work is quality or whatever, but generally when I get my car bashed in, I go there, my insurance company says, take it to one of these 3 body shops. They fix it. They all figure it out. So they got like these like preferred people or whatever, but it definitely seems the opposite with like houses and contractors. Like they definitely don't listen to what another contractor, to your point. And I wonder if there's a reason why that is, or maybe there's just so much variability compared to cars.
It's the variability. I mean, you look at, and I worked in auto claims as well years and years ago. So I've seen the difference of it. And like when you take a Honda Civic, I mean, there is a book that'll show you the cost of every single part, actually the labor that's associated with installing this headlamp or this hood or this. So it's like, it's a very linear equation. When you get into a home, it's not the same, because then it's like, okay, you've got continuous flooring. Does that flooring go into other bedrooms? Then does that flooring go under cabinets? Like, there's so many other elements and variables. Then also, like, how much stuff is in the way? Like, do we need to pack the whole house out to do the repairs? Are we painting just these walls? Are we painting those walls? So the big difference is that variability component, and that's what plays into it a lot. The auto world, the reason why it's actually gotten pretty successful is they've automized a lot of it. A lot of it does go through an AI-like system. When I was at Farmers, that was 2012, 13. Before I left there, they brought in, this was when AI was very, very new, and they brought in kind of like an entry-level type AI system, and it would just scrub estimates. So literally, it would just take an estimate and just knock 20% off the top and approve it, because it was cheaper for the insurance companies to do that than employ, people, staff, sending them out to inspections, drive time, a workers' comp, and all that stuff.
Fascinating. So, okay, let me, if you don't mind, Mike, let me indulge myself here, and let me share an example of an insurance claim we dealt with. And I would love to get your opinion, David, on like how you would have served us in this situation. So we had, this was, a year and a half, 2 years ago now, Mike. We had an insurance claim. Yeah. So it was an Airbnb property that we had just done a top to bottom renovation in, main floor and basement. The one thing we foolishly didn't replace was the oil furnace. So it still had an oil tank, and it was like a concrete utility room oil tank in there with like a little teeny copper wire or a copper tube that went from the oil tank to the furnace. So the furnace itself was fine, but that copper tube failed, and it flooded with hundreds of gallons of oil into this basement. It was like new carpet, new LVP, brand new shower, everything was brand new in this, including furniture. Finished basement. Yep.
Yeah, okay.
And so essentially we called our insurance agent. She called the insurance company, got it all set up. And this lady with the company came out, and she's like, okay, yeah, this is really bad. I'm going to dispatch a remediation company. And I was like, okay. And so they dispatched a remediation company, and then had to get like a hygienist in there to look at what it was. And then they got, I guess, the quote from somebody to build up like what it would take to replace this. And then this remediation company that they had sent out basically just didn't hold up their end of the bargain and did a bunch of the work, got a bunch of the oil soaked up, but didn't finish the job. And then they were arguing with the insurance company about replacing the floor, what are they called? The sill plates of the walls that soaked up oil. And the insurance company said, you don't need to do that. They said, you do. And essentially they ended up walking off the job. I'm going to make this long story short. And then we had to bring in our contractor and finish it all. And this was like a 6-month process, Mike, maybe 8 months. And the whole time we're obviously missing rent on this thing. And of course we didn't have the Airbnb, whatever they call that, rider on the policy. So, so finally it all gets wrapped up. They had to give us 3 different adjusters from the same company because they kept having such problems with the situation. And I know that they must have messed up, because at the end they were willing to cut us a check for the lost revenue of like $15,000 from the Airbnb, which they 100% and I 100% in email agreed we were not owed, because we did not pay for that policy. So I know they messed up at some level. But yeah, it was like this big battle, and they were essentially just fighting everything as far as the cost to do anything. And so we ended up bringing our contractor in and just finishing it, and didn't matter what they paid us, we had to get it done. And so, yeah, it took 6-8 months.
Yeah, and that's, and that is something that I hear so frequently, is that, so when we had touched earlier where you said you take it to an auto body shop, it's their preferred vendor when you have a car accident, and they just kind of settle it out on the back end. Yeah. That's how it's kind of supposed to work in a perfect world on the property claims with their specific vendors.
Okay.
But it's not. When you have things like oil like that, it's just not a standard water loss. So they know they were probably treating that like you just had a toilet overflow or something like that. It's water. Let's just clean up the water. But when it's oil and you're affecting sill plates and things like that, that can actually, you're right, that can cause a substantial amount of damages. And then I would imagine that oil's flammable or combustible at some ability or some component too. So it's like you don't need, if you have that in the walls, seal up the walls, and now you have an electrical short, you might cause like an actual explosion type thing. So
right.
It's, I guess I'll kind of speak high level, like how we would come in and get involved and kind of fight for something like that. And just, I speak to what the insurance companies have done. And so typically instances like that, yeah, we would enlist the services of a hygienist, an industrial hygienist right out of the gate, because it takes the ambiguity and out of the discussion with the insurance company. Because the insurance company, you got someone behind a desk working the job, handling it virtually, and they're like, oh, it's just oil, put some rags down, clean it up, and walk away. And it's like, no, that's not how you do it. So these industrial hygienists, that would be the right approach. They come out and they're completely another third party company that takes us out of the equation, takes the insurance company out of the equation, and they'll usually put together a scope of work, and that helps us kind of begin the argument. But the public adjusters are really good and known for being very detailed documenters. So like the insurance company, for them to pay X, they need to see Y, or they need to see some documentation for that. And so what we would do is come in something like that. We would take readings that will probably show moisture. It's elevated moisture of actually the oil and stuff, and the oil and whatever compounds are in there. We have the industrial hygienist, and then we even put together an estimate. So like we put together this whole package: photo documentation, industrial hygienists, an estimate itself, and provide them with like everything to check their boxes on the inside. Because in a perfect world, we want to settle the claim just as fast as they want to settle it, because we want you guys to be happy. We want to move on and help other clients. And, the insurance company doesn't want to deal with us because we're not going away.
Right.
So the big thing that we would do is really just come in and try and document and get an estimate, the proper estimate to them as soon as possible, rather than kind of saying, oh, let's just get this contractor going and have them kind of, they'll work with the insurance company on the back end, because you see how that kind of caused some issues in the beginning. So, it's something we often see where there's just disputes between these third party vendors that they send out, that they say are part of their vendor program.
Yeah.
But you've got what was that desk adjuster even in the same state, or was that adjuster you were dealing with at a call center in the Midwest
No,
somewhere?
she was the one. She was actually located in our hometown where the property was, and then the other one after they kicked her off was in like somewhere in the Midwest, and then the third one was some other guy from this local area, and he actually is the one that was like, okay, I'm gonna get this shit resolved for you, and all that sort of stuff. And I think he kind of had to clean up a little bit of a mess.
Yeah, and what also kind of speaks to is that when you have these desk adjusters that work in these call centers in small town, Midwest, they see estimates from all over the country. So they'll see a job. They're like, oh, well, I just paid the same job. It cost 10 grand down in Louisiana. But we're like, well, now we're in, suburban San Diego or Los Angeles or something like that. I'm like, hey, $50 an hour isn't a viable price to hire anyone here, in any tradesman kind of thing. So there's a lot of just lack of knowledge and experience in the industry. A lot of these desk adjusters that you're working with are also fresh out of college. That's how I got the job and got into the industry originally. Is I came in right out of college with very little experience. They put you through a training program that fits their curriculum and like their narrative and the way that they want to drive claims, and then you go out and kind of you're fairly autonomous for at least a lot of the field inspections and things like that, and that's where stuff gets missed.
So your role when people come to hire you is essentially to give a full proof, like you can't deny that this is what needs to be fixed, and here is the cost based on this data of what that will cost. That's kind of the hope, right?
And we provide them with everything they need. There could be, hey, when we removed these baseboards, it actually peeled up the paint. So now we've got to paint the walls. We take a close-up photo of that and label it and say, hey, look, now you need to paint the walls. Then they're like, okay, cool, that documents our file. And now when I include it, and my file gets reviewed by some quality assurance person or a manager, they're going to see, oh, that's what happened. There's direct physical damages. Let's pay it and move on, kind of thing. So it's really like a detail-oriented documentation and plan of approach for the entirety of the claim itself, so that they've got everything in front of them. We do a lot of the jobs for these insurance adjusters because we just want to move these claims along, where they'll be fighting, hey, we didn't see damage in this room. Okay, cool. Here, we've already got photos showing moisture readings or oil in the room if we're talking about your instance. So we really just try and take the reins on it and drive that claim to the narrative that we know is going to have the best financial outcome for our clients.
Right. Okay. Fascinating.
Yeah. Do you ever have situations where, I don't know, I would say you have a client who feels like the insurance adjuster is too low. You come in and you do your thing and you find that it's actually the other way around, that the insurance is being too generous. At that point, do you have like a fiduciary responsibility on either side?
I mean, I've been called out, and
does that make sense?
There's certain what I see that happens more often than not is there's usually like cultural differences where you've got maybe a first generation American where the way that things work in their culture is everything is negotiation. So no matter what, if the insurance company came out with 10 grand, even if it was 10 grand, they still feel that there's some sort of level of negotiation. And so we do see it. And there's been a lot of times where we come out and say, hey, look, like, we don't think there's anything more on the table. And, you were taken care of. We can't help you. We wish you the best of luck and move on. And so it does happen because we do have a fiduciary responsibility to our clients. And when that happens, I guess it's really the best situation for the clients. I mean, we really don't, in a perfect world, our role really wouldn't exist, but it does.
Yeah, but it's needed.
Yeah.
Mm-hmm. Yeah. Yeah. How do you get paid in all these? Like, what does that relationship look like? Are you paid basically by the person that hires you directly? Is there like something that's worked into like the size of the job? Do you get paid the same if it's like a water leak in a kitchen versus a house fire?
Each state is a little bit differently, but most states you have to work on a contingency basis. So like in California, it's a fairly limitless, they call it like a limitless or non-capped fee agreements, but we can't exceed 49%. And that's kind of pretty standard. Like we can't charge more of a fee than what the client gets. But so most of the times we come on a contingency basis. It depends on what type of claim we get involved in and at what stage of the claim. So sometimes people call us and say, hey, look, we've been driving this claim for 9 months. There's another 50 grand on the table, we think, and we look at it and we're like, okay, we have to rehash the entire claim. We've got to start from scratch and now work through where they have already done and then try and get this additional supplemental 50, so to speak. Instances like that will be on a contingency fee, usually on a higher contingency fee, like 30%, sometimes even higher. So that would mean that we would charge 30% for above and beyond where they've already gotten. So if they struck out at 50 grand, we think there's another 50 grand, then we would be on a contingency fee for that additional 50 that we get them. When you alluded to, or you had mentioned about like big house fires and things like that, if we get involved in those claims in the early onset, so let's say, for instance, like we signed up a client yesterday, 2 days ago, they had an apartment fire. So it's 2 apartments with an attached single family home kind of a weird property, cool property. But we signed them up before the insurance company even got involved because it was a direct referral from a friend. And something like that, we're on 10% from $1. And so we build in 10% there, or we charge them 10%. They end up paying us. The money doesn't really come directly from the insurance company. It does come from our clients, but in instances like that, where we know we're going to get them 2, maybe 3, maybe even 4x the dollar that they would get, they're like, no one ever shies away from saying, oh yeah, hey, you're really owed that money. So it's like they see it because the insurance company's first undisputed estimate might be 100 grand and we land at 400 and they realize, oh, if I'm on at 10%, yeah, this person did definitely deserve that $40,000 that they get from that. So to answer your question, big, like kind of high level contingency fee, it does come from the clients, and that's why typically public adjusters are more suited for the larger claims because there's just a lot more items to build in. Like for instance, some people will, if it's really a financial crunch, and we get them a lot more money, they'll say, okay, hey, we're going to take that money and put it towards the kitchen cabinets and we'll save money on the flooring so we can pay their fee or something like that. Or I'm going to hire a contractor to do the inside damages, but I've got a roofer that can do the roof. Yeah. So I'll subcontract out the roof, and that's where I'll kind of gain back the money or the fee for the public adjuster. Like, there's a lot of things, and they're not unethical. It's just you kind of have to do work around it, but we still get them so much more than the insurance company actually pays. That, I mean, out of the 400 clients that we've helped over the last few years, I've had one actually walk away from us and stiff us. Every single other one has been more than happy to pay our fee. I mean, they just don't really have any disputes.
Dang, I would have definitely paid your fee.
Yeah. Yeah, I mean, that's the thing is people, they see the first estimate because we tell them, we're like, hey, look, we're getting out there and we're like, hey, look, they're going to pay you $100,000, but we think we're probably going to land at 300 or 400 in this instance. And they're like, sure, whatever, because it's super early on. And then when they see the first check, they're like, oh shit, you guys are right. And then we get into it, and then here's another $100,000, another $100,000. They're like, okay, hey, you're good. Yeah, keep doing your thing.
Yeah. So typically, is it best for people to reach out to you or like someone like you, like early in the transaction, like based in the process, like
honestly,
right when
the best
happens,
bet
or until
for all
they're
parties
getting
involved
until
is
they're getting
early
screwed
on,
by the insurance company?
Because a few different components. One, the insurance companies are becoming more and more denial basis, I guess, kind of things. We're seeing it a lot in California, where a lot of the insurance companies are denying claims a lot sooner and a lot quicker. And when a claim gets denied, it's very difficult to overturn it. And most public adjusters, a lot of public adjusters may not even take the claim on. So sometimes people give up information that isn't even related to the claim that leads in a denial. So for instance, roof claims, it's a common thing that we see across the country. We don't see them a lot here in San Diego, but we see them a lot in the rest of the country. Different insurance policies have different limitations when it comes to leaking roofs. And sometimes people will say, oh, yeah, I had a leak to my roof 10 years ago. But they never said that they actually did get that roof repaired. Now, come present day, they had another leak to their roof. The insurance company says, oh, well, it leaked 10 years ago. You never repaired it, denied, boom, and just close the file out and walk away. And refuse to really hear new information that may actually be the smoking gun to overturn the claim. So I don't want to go on a crazy tangent, but things like that happen because when the insurance companies get on the phone with the homeowners, for some reason, homeowners just want to just talk and tell, and the insurance companies will ask questions that sometimes lead in a denial that really aren't legitimate, true denials of coverage. And there are some instances where, hey, look, this policy does not cover that. There's nothing we can do about it. It's just the policy that you signed up does not cover X, Y, and Z, and that is what it is. But so.
Yeah, that is interesting. I mean, we see that a lot, just like on the real estate transaction side too, right? Whether it's, sellers sharing a lot of information with us when we're doing off-market stuff. Can't tell you how many times we've been on the phone with sellers and they'll drop like a little quip about their divorce or like, Tim, you stole some money from me or whatever. Yeah. And we're like, oh, really? And now we have a cued in motivation, right? But then also too, even on the retail real estate side, I think it's just because naturally as humans, we want to converse with other people, especially when they're on the phone or you're talking about a situation. You have people shoot themselves in the foot by mentioning things to lenders like about, how I'm getting ready to start a new job. It's like, you're not supposed to freaking do that when you're buying a house, right? And now the lenders are like nervous about that, or people mentioning things like that to title companies. And it's interesting. I think it's just a very important reminder for everyone who goes through this when you're talking to that insurance company. Like, don't overshare things at all. Like, let them kind of ask the questions and just like give.
I always say it's like you're getting arrested. You kind of have the right to remain silent. And if they ask the questions, just answer them very directly. Like, are you employed? Yes. Did you have, what happened? I had a leak to the roof. Like, don't go on to, my cat was up there and might have kicked something. You're right. It's just people give up a little bit too much information and it can be misinterpreted.
Totally.
Yeah, exactly. And they're like, are there drugs in your trunk? I don't know.
Yeah.
Right?
Yeah.
Just plead ignorance.
A question.
We'll see what happens.
Go ahead.
No, so can I ask one more question, Dan, before we go into yours? It's on the same vein. So if someone's looking to work like with an insurance adjuster, what are the kind of questions that like the person that's looking to hire you should ask? Or like what designates a
I would
good
think
insurance adjuster versus a bad one?
the big things where we found success is just the experience and the way that they process claims. Our claims are our demand, the entire process of how we handle a claim and process it is driven by, in California, the California regulations and insurance code. So we create an argument, all of our arguments and the demands that we put forth are on a basis of those regulations and insurance code. Because at the end of the day, if it doesn't work out with us, which it doesn't often, but every once in a while it will, we can hand it over to an attorney, and the attorney's like, hey, you've already made these legal arguments, so to speak, and they can run with it. So I think the big thing would be is experience in the industry. I think that public adjusters do very well when they have prior experience working for the insurance company. And that's how a lot of my team is. A lot of my team came from some component or some avenue in the insurance industry. I also see a benefit of them looking for referrals, just like anything else. Like when you get a referral from like, hey, my family friend worked with them, or looking at like past reviews on Google, Yelp, social media, Facebook, things like that. I think that's another place to rule out and kind of separate from some of the bad eggs in our industry. Unfortunately, there are, just like any other industry, there are some bad apples in our world. It's and it can get tied up with things, but I often see that when people look for like Yelp reviews, Google reviews, those tend to weed those guys out of the mix because they help a few clients and people are very vocal about it.
Makes sense. Okay. Yeah. I was just looking at my notes here. So I have so many questions, but I'm going to bring up, for the interest of time, because I know we're going to run short here, insurance prices. Like as real estate investors, we're all seeing like insurance prices like drastically jump. And I know this isn't necessarily your business, but just because you're in the industry, I'm curious because we're seeing obviously in markets like Florida, markets like Texas, like specifically Houston, like there's insurers leaving altogether. We've had that in Washington State, some insurers leaving. I think some of that has to do with legal like policy, but like what is going on in the industry? Because it's cutting into everybody's margins right now, seeing prices increase 10 to 20%.
Yeah. The high level answer is the reinsurance component. So a lot of these large storm, hurricanes, natural disasters, fires in California, hurricanes in the Gulf Coast area, those are causing such substantial and huge impacts on the environment there that these insurance companies can't get reinsurance. And so reinsurance is, let's just say farmers insurance, like a big name insurance company that everybody knows. They have insurance to cover $1 billion worth of damages if a big fire happened in Southern California, but they have insurance for their insurance. So if there is a huge event, someone has to come in on the back end and say, hey, if it goes beyond $1 billion, we'll step in for you. And so what's happening is that with the increased natural disasters and cost of these natural disasters, those reinsurance companies aren't even writing policies to cover the larger insurance. So it's like a trickle-down type effect. There's also been some regulatory and legislative stuff, at least in some of the West Coast states, that have come down to where specifically in California, they have stopped allowing the insurance companies to take rates. So that means like adjust their rate on premiums. And so that kind of prohibits them from just being the free market and saying, okay, everybody's just going to be as efficient as they can and try and provide a competitive product. And when there are regulatory type agencies that are limiting their ability to operate at their fullest extent as the free market would allow, that's where you kind of run into those issues as well. And that's what we're seeing. So an answer to it, I don't know. I think it's a part legislative.
I think you nailed it. Yeah. I think you nailed it. So these massive, so I did not know that there were insurance companies for insurance companies, and that would make sense because I do think that some of these natural disasters that cause so much damage is just driving the cost for everybody in the country. Because the same insurance company in Florida as, say, Farmers is up here in Washington. That company still has its same profit margin regardless of where the storm's at, and so it affects everybody. And then we know here in Washington they have similar rules where they can no longer use like credit or income to insure people. Like it has to all be across the line, and we've seen insurers leave the state because of that, and just the legislative effects of that. So it's, I think you nailed it.
Yeah. I would say,
yeah, no, it's very
for the real estate world, what I say is shop it yearly.
Different variables.
Get a broker, or get a few brokers, and I work with a bunch and shop. I mean, if you've got over 3 or 4 properties, I think you are going to see a huge benefit of shopping those properties once a year.
Makes sense.
Yeah. So
Yeah,
totally
absolutely.
awesome. Well, really good stuff, David. I really appreciate you coming and sharing all that. All right, so we are coming up on time here, so we're going to dive into our end of show questions. So I know you're not a professional real estate investor, but you still have a little bit of real estate investing experience. And I'm super excited for your crazy story because we talked about it in Georgia, and it's one of the wildest stories I've ever heard. So our number one question, which is always the crowd favorite, what is your craziest real estate investing story?
Before I started my company, I owned a multifamily here in San Diego, and it's technically 2 small houses on a lot, but so I have to kind of envision and play out the layout of the property and to understand what's going on. So you've got the city street up here, and then the houses are down here. So there was probably about a 20-foot gap between the city street here and the property down here. If you know anything about plumbing, drainage in the plumbing world works on a gravitational level. So there's no pumps typically in a normal house. Like, so when you flush a toilet, it goes into a drain. That drain is just sloped, and so it drains into the city main. So most instances, houses sit slightly above the city street so that it can just drain into the city main. Well, this property, when I kind of drew it out, is that the city street was up here, the houses were down here. So they all drained into a well in the front of the property, and that well then had a pump. And in that well, there was a pump. The pump would pump into the city street itself. So flush a toilet, goes into a well about 50 feet in front of the property, and at the bottom of the well, about 15, 20 feet, there's a pump. It pumps it up to the city street. So I bought this property and turned over both of the units, both of the homes, and it was pretty much all in for it. I didn't really have much left over for closing costs, buying it, and then the amount of work that it needed. I was about 3 or 4 months into it and having some serious issues with this pump, and they call it a sewage ejection pump and system. And so I found myself, and I wish I would have pulled up the photo, but I am sitting at the top of the well, realizing that I have to go down in this well. I am in a full Tyvek suit, like goggles, respirator, Tyvek suit, gloves, booties, and I've got an extension cord wrapped around my body. The extension cord is connected to the back of my 72-year-old mother's Hummer, because when you go down into these wells, it's shit water, and methane is heavier than oxygen. So when you get down to the bottom, there's technically no oxygen. So my mom is sitting up there with a big box fan, trying to circulate water. I've got a extension cord because I didn't have any other rope. So if I were to pass out, it was connected to her car. She could just rip me out. And I climbed down this well, and I am about waist deep and shoulder deep in water, blindly trying to disconnect this pump so that I can bring it up to the surface, reconfigure it. I had to fix one of there's a spinning motor on it. And then go back down there. So and keep in mind, this well is about 3 feet in diameter. So I'm a pretty large human. So you're bent over, and your head is up, and you can't even see it. You're just working blindly. And so, I mean, I got it. I had to disconnect it from the city main. And when I disconnected from the city main, it's like spewing out poop water. And then I had to disconnect it from the bottom. And so then, I got it, disconnected that. I had a small ladder in there that I climbed up. I was up the top. I fixed it. But then I had to go back down and reconnect it back up. And as soon as I reconnected back up, it wasn't connected fully at the top mount. So it started spitting water against the wall and splashing everywhere. But, I mean, got it fixed.
Oh, my God.
And didn't pass out and got out of the well. And, that was one of the big turning points of me realizing that I'm not going to self-manage real estate, and I do need to hire out and know my own value and worth.
There's so many things in this story that I am blown away. That you're alive. Like, that's like a serious thing. Like enclosed space training. Like guys go down there with like oxygen masks, not Tyvek suits and respirators. An extension cord that is not rated for a guy your size.
Dude.
And your mom's 72 and she has a Hummer. Like what? That's
the first thing I said too.
She had like an old school Hummer H3, and it was, and I mean, the only rope we had, and like it was leaking out into one of the homes. So like I had to get it done right then and there, and the only thing I had was an extension cord, and I'm like, it's wire. It's got to have a pull strength of 300 pounds. I weigh 220 plus everything else. Like it's got to fit it, cover at least 200 plus pounds. So.
God damn it! Oh, I met him. I know how big he is. Yeah, he's big.
And Dave's not a small dude, man. David's like as big as I am. Yeah. Mm-hmm. Oh, definitely. Everyone's stronger than me at this point. I'm old and washed up, man. But that's so freaking wild. Like
that's amazing.
Yeah, I'm glad that you lived to fight another day.
It was like 7.
So how old were you when you were doing this?
6 years ago. So like 28, 29.
That's awesome.
Yeah, I mean, well, I didn't realize that I was on the way down to do this.
You were old enough to know
have to climb down it, and my dad calls me and he's like, "Hey, dumbass, methane is heavier than oxygen. You won't have anything, and it's not like you will be like, oh, I'm running short of air." He's like, "No, you would just pass out." He went into some chemistry behind it, but he's like, "You would just pass out, and you wouldn't even know about it." And so I was like, "Oh, I'll just run a fan." And so I just had a fan circulating oxygen. I was like, that'll do. And then I even went to the point where the first time I climbed down, I was like, I'm just going to hold my breath, but it took me a lot longer. So I would like kind of go up and down a few times. And it was
good stuff. Yeah. In shit water, methane.
You're like an open water diver.
And I mean, I was getting like, there's little floaters and everything. Like it was in the thick of it.
That's crazy, man.
It's so bad.
Yeah, I had to go. I had to fix it because the
sewage
injection pumps have. It's like a sump pump, but it has a little grinder, so it grinds up the solids before it ejects it out. And that little grinder got clogged up with some stuff on it, and so I had to fix that and then run it back down.
Yeah.
Wow. Right.
Yeah, because it was just clogging up the rotor on the ejection pump.
Dude, I'm just having nightmares right now of what was floating in there.
Crazy. Yeah. Wow. Yeah, that's awesome. Well, I appreciate you sharing that, David. That's a good story. That's a great podcast story.
It's funny because when that's how I kind of led the GoBundance call here. I wonder, can I share a screen with you guys? I think I've got the photo. I know you guys are running out of time. Where is it?
Yeah, you should be able to share screen at the bottom if you want to do that. You can also. Oh, you're good. You can also send it to us, and we'll work it into
the video. I'll share it too. But here,
so if you guys want to see the video, what has going on, you go check out YouTube. Yeah. It's working. We'll fill the.
Can you guys see it?
No.
Let's see.
Did it go?
Window.
No.
Oh, there we go.
Oh, maybe not.
So I'm not sure if you can do it because you're like a guest.
So this is the well. So I mean, you can see this well is not very wide.
It's like a tube.
Yeah, and then I also, if you see that, the Tyvek suit wasn't long enough, so like I duct taped it right here, but like there was still skin exposed that I got.
Yeah.
In there.
That's how you get pink eye, dude. That's what I was thinking. Maybe you put your gloves, you had big gloves over top of it, and you would duct tape it all sealed. But no, you went raw dog on that, man.
I didn't have long enough gloves.
This is like if you have like a little cut or something on your wrist, you get sepsis. Dude.
Yeah, this is how you die. Yeah.
You know, well, I mean, I did make sure that I was like, there's no openings on my body anywhere. And then, I mean, the boots were completely covered, but yeah. Wasn't the highlight of my life, but here I am.
Yeah, you survived. That's great.
Crushed it. Yeah, that's wild. Yeah, I appreciate you sharing that. That's an awesome one.
Absolutely.
Cool. All right, how do we shut off the screen share? Yeah, there we go. Cool. Insane. All right. Second question. We usually do what is the number one piece of advice you would give to a small investor looking to take their business to the next level? But instead, maybe let's change this and go, what's the number one piece of advice you would give to a real estate investor that is dealing with an insurance issue and they're looking to hire someone like you? Like, what's kind of like the one or two things that they should absolutely know?
I would say seek out. I mean, if you're going through an insurance claim that's anything over $25,000, it's to seek out help from a public adjuster. Do your due diligence on them. I mean, just as you would with a real estate agent or buying a property, do your due diligence on them. But there's really never been an instance where we've gotten involved where we haven't, just from a cost benefit analysis, provided a huge benefit from our involvement. It takes the emotional stress off of our clients. Sometimes our clients, the husband and wife are in crazy disagreements. The wife is super stressed out about the property. The husband's trying to manage this insurance claim, and it just creates a big feud in the family. And we're able to alleviate that. So it's not only just the financial components of it, it's the emotional stress it puts on people. And I really say that now seeing, and so that property too that I showed you, I had an insurance claim there as well. And that insurance claim, they tried to pay me $8,500, and we ended up at $180 on the settlement on that. So there's a benefit there. So if that was me and I came on at 20%, so you pay me $40,000 to get you an additional $140,000, that's worth it. I would put money down on that investment all day, any day, every day. Yep. So my biggest thing is just don't think that the insurance companies are on your side. They're not always maliciously there to financially impact you, but they just have a different perspective and financial outcome and goal than what you're looking for. And finding help in the public adjuster sector is always going to be there for you.
Nice. Great advice.
Yeah. Awesome. That's great advice. Cool. All right, David, last question. Where can people find you, follow you, and reach out to you if you'd like them to do so?
Yeah, absolutely. Best thing would probably be just on our Instagram. Our Instagram account is just at propertyclaimsconsultant.com. And we're there. We're pretty active on Instagram, Facebook, Yelp, and Google. And we're here in pretty much every West Coast state, pretty much all states west of the Rockies, we're licensed and operate in.
There you go.
Yeah. All the states that really matter, let's be honest. Yeah. West Coast is the best coast. And all of our Southeast listeners, which is most of them, just stop listening. But,
actually, we are in
awesome, David.
Kentucky,
well, thanks so much for coming on the show.
Yeah, absolutely. Thank you, guys.
Oh, you are? Okay, cool. That's good to know. Yeah, that's good to know. We have a lot of people in Tennessee, actually, surprisingly. There's certain states over there we get a ton of listenership. We get a ton from Georgia, a ton from Florida, and a ton from Tennessee that listen to our show on a regular basis. So it's good to know. Awesome. Well, David, thanks so much for coming on the show, man. We really, really appreciate your time. And you guys, I hope that you learned a lot from this episode. If you are a real estate investor and you own any sort of properties, there's a ton that you can get out of this, and you should definitely reach out to David if you live in any of the West Coast states or Tennessee or Kentucky, because he can potentially help you out if you have any insurance woes. And besides that, if you don't live in one of those states, then find who the good person is in your market, because it could save you an insane amount of money here. So thanks for listening, everybody, and we'll talk to y'all next week.
See you.